Record gold buying by central banks. In 2023, central banks purchased 1,136 tons of gold, the largest annual increase since 1967. That is not a routine portfolio adjustment, it is a historic move. When institutions that have the power to print money decide to accumulate large amounts of gold, it tells us something important about how they see the future. These purchases are accelerating at a time of global instability. Geopolitical tensions, inflation shocks, banking stress, and growing uncertainty about the international monetary system. Central banks are not reacting emotionally, they act strategically and long-term. Most importantly, this trend signals a subtle but meaningful shift, declining trust in paper currencies. Gold carries no promise from a government, no counterparty risk, and no political conditions. By increasing gold reserves, central banks are quietly reducing their reliance on currencies that can be inflated, sanctioned, or destabilized. Gold, in a time when paper loses value today, money can be created with a few keystrokes. Governments and central banks can expand the money supply almost instantly. But gold cannot be printed. It must be mined, refined, and physically stored. Its supply grows slowly and predictably. History shows us a clear pattern. Currencies come and go, empires rise and fall, monetary systems change, yet gold has remained a store of value for thousands of years. From ancient civilizations to modern economies, it has consistently survived political and financial upheaval. Because of this history, gold is widely seen as protection against systemic risk, the kind of risk that affects the entire financial system, not just one company or one country. When confidence in institutions weakens, gold often becomes a form of financial insurance. Global crises driving gold demand. Several major crises have reinforced this renewed demand for gold. After the pandemic, inflation surged to levels not seen in 40 years, eroding purchasing power across the globe. For many countries, this was a wake-up call about the long-term consequences of massive monetary expansion. The war in Ukraine introduced another powerful lesson. The global financial system can be used as a geopolitical weapon. Access to the SWIFT payment system can be restricted and foreign reserves can be frozen. This demonstrated that financial assets held in foreign currencies are not always fully under a nation's control. At the same time, major corporate collapses, such as Evergrande in China and Silicon Valley Bank in the United States, showed how quickly confidence can evaporate. When companies fail, stocks and bonds can lose value overnight. Gold, however, does not depend on a company's balance sheet. It remains a tangible asset when financial structures begin to shake.